Good day, everyone. My name is Gary Fowler, and I'm the CEO, president, and founder of GSD, Get You Done Venture Studios, a premier AI and quantum venture studio located in the heart of Silicon Valley. I've been involved in numerous startups and several unicorns. I was on the original management team at Click Software, which was sold to Salesforce for $1.35 billion, and also Eva, an AI HR tech company that I co-founded with Dr. David Yang. We believe that intellectual capacity is evenly spread around the world, but opportunities are not. With that, I have an incredible guest today. So Ed Boyle is with the famed Medici Bank. He is a serial entrepreneur, a cloud-native digital international banking guru. He's a problem solver and builder. He's an expert in digital banking systems, and he's with Medici. Many of you may know the Medici family. They were in 1482. They were original bankers in Italy. They were the funders of Leonardo da Vinci and Michelangelo, as well as a number of popes. An incredible family, and also an incredible CEO. With that, I'd like to bring Ed Boyle. Hi, Ed.
Hi, Gary. Good morning. Thank you for having me. Pleasure to be here.
So, you've had a really wide experience base, everything from American Express in the late 90s to e-marketplaces. So you've done a lot. You've seen a lot of growth. In fact, you were at American Express to 99, and then you went back in 2003. What made you decide to do that?
Well, I left to go into the dot-com bubble. Like many people, I was fascinated by it. I tend to see, a few years forward of where things are going. And at that time, I was like, yeah, the internet makes a ton of sense. As we all learned, the hard way, it was too early. The vast majority of the population was not ready to adopt the internet in 1999, and it blew up, right? And it partially blew up because you had a lot of people that could see around corners that threw too much money at it at too high of valuations, and startups couldn't survive. But I was highly respected at American Express, and they were looking to launch a new business within American Express, and they wanted someone that was a known quantity, and that was a builder and a problem solver and entrepreneurial. And the employees of American Express are fantastic, but many of them are employees, and they're not entrepreneurs. Right? If they're entrepreneurs, they wouldn't be there. So I think their candidate consideration was quite small. Like people that were known quantities that worked here before, but had gone off to start their own business or work for a small startup. There was very few people. So when they called me, I was like, well, I don't think I want to come back. But it was to build the gift card business at American Express, which was an entirely different model. Right? It wasn't a credit card, establish a long-term relationship via direct marketing, but instead was, we don't know what the distribution model is going to be. We're not sure what the business model is going to be. All we know is that the Traveler's Check group is going out of business as the air deflates from this balloon, where people would buy Traveler's Checks and in the billions, tens of billions of dollars.
I remember those Traveler's Checks all the time. Traveler's Checks were a big thing.
Well, you know what they are, Gary? They're stable coins. Right. Mm-hmm. And, they spend enough time in the space, you start to recognize patterns here. And Traveler's Checks, be they Thomas Cook, American Express, whatever, they're basically USDC, USDT in paper form. But behind the paper form is a distributed digital multi-node network, right? Where you would take this token. It happened to be a paper token in today's world, right? It's a QR code perhaps in your phone. But, you would take a paper token, which had, a multi-digit, it could almost be 37, sort of like almost like a wallet ID on it. And you would take that into a bank, or you'd bring it to a restaurant or a hotel. They would take it to a bank, and the bank would read that, that public key and recognize that, okay, we know how to redeem this at American Express through this distributed global network. And that's how those, what I call stable coins, those paper-based tokenized stablecoins were in the tens of billions of dollars without any new regulation around them. Right? There wasn't, Congress wasn't freaking out about the 30 or 40 billion dollars that American Express was sitting on and managing in treasuries and other, low risk assets. But yeah, so I ended up going back to that business to see how we could get into.
How was it when you left, or it'll come? Ed, to go down through and go back. How was it coming back after you left American Express? Did they open? Did they have open arms bringing you in, or what was it like?
Yeah, one of the great things about American Express is they're very good at managing people. They keep very good records. So my work history there was of public knowledge to the people that were hiring me. So they knew the sort of animal that they were getting, and at least one of the individuals, the management team had worked with me previously, and so there was high levels of trust, and I believe I established myself well. Took over some positions there where, for example, product development. I was running. I was a general manager of that business, and they collapsed under me. Sales, product management, and product development and implementation. And normally those things from an operator level, where I was at an operator level, those would be separate, right? The sales team would sell it and they throw it over the fence, and then the product team or the implementation team's got to figure out how to implement it. And of course, we're implementing a product that the product team had built. And traditionally, when I come in, those three areas were separate. And I came into the sales side of it, like, can we devise a distribution strategy and execute against it? And I said, well, the product is not good enough. The implementation's not good enough. I just came out of a startup, and we have to be the easiest business with which to do business. And we're very difficult to do business with American Express in the prepaid space, right? And so they said, fine, why don't you take all of these three under you? And I collapsed with a new product development life cycle we were doing a 17-month new product cycle time frame, and I got it down to 11 weeks.
Wow,
right? So we're able to launch a product in 11 weeks. Yeah, because you can't compete. Now, if you're like, coming back to my original point, if you're in the relationship business of establishing a credit card with somebody, you can operate in a pretty slow paradigm, because Chase and Citibank, they're not launching new credit cards every year. But in the gift card business, be it Amazon or Best Buy or whomever, they are launching, new flavors, every year for Christmas, basically, right? So we had to get that cycle time down from a year and a half down to within a quarter, which enabled my sales team to be able to go and make promises that we could keep in the near future, right? And so even as salespeople sometimes do, is they make promises, they sell things that don't yet exist. But I was comfortable with them doing that, because if we got a large customer to buy what did not yet exist, we could make that exist in 11 weeks.
Well, that's amazing. So how did you were at Blade Payments. You did the thing with point payments.
We morphed. So when I've had enough of American Express, I decided I wanted to leave, and I wanted to become an entrepreneur again. And but of course, I tend to see gaps and opportunities. And at American Express, one of the gaps, sometimes you just come across these things and you shake your head like, is this real? So you might be familiar with pay with points, right? Pay with miles at the time. Yeah. And then there was an integration to Amazon and an integration to Live Nation. And I was talking to a very large retailer, and they said, well, we'd like to have, people to pay with their Amex points at this very large retailer. I was like, well, I'll call those people over there and ask them in that department, why don't we do that? And they said, well, that's going to take at least a year and cost at least $500,000 for each entity to integrate the systems. And I was just like, that's not how startups operate, right? A startup would be like, oh, we'll just do an API connection, REST JSON. This should take us about 3 weeks, end to end to get it built and tested. That doesn't make any sense to me. And as I understood, I looked at the American Express, these terms, RDC, XML type of structure of their API. It was a sort of thing that was very difficult to work with. And I had proposed, well, I want to leave, and I'm thinking I'll create a pay with points platform, and the industry could use it. And it would be, very modern language. We would connect into these legacy brands and their legacy systems and enable them to connect into any retailer, in a couple of days. And so we built that platform. And we signed up a lot of the major brands, hotels, airlines, and credit cards. And the problem was that everybody wanted to see it demoed in reality before they would use it in reality. And I couldn't demo the Capital One solution to Citibank. So I was just, Googling for virtual currency, third-party virtual currency in 2013. And I came across a Satoshi Nakamoto white paper. and then game over. I was just like, this is unbelievable that this is now that they have figured out how to do this.
Who is Satoshi Nakamoto? Do you know?
I don't know. It's not Craig White. I'm pretty sure of that. But other than it not being Craig White, I don't know who it is or what group of people it is. And I don't frankly care, because apparently Satoshi Nakamoto doesn't care for us to know who he, she, they, or them are.
It's interesting. It's, it's like a legacy thing.
It is a very interesting. It's also a great marketing sort of thing too, right? It's like you're behind the creator. Right? Who owns more Bitcoin than anybody else. But
about the when you went over to e-marketplaces and you came in a month before the market tanked in March.
Yep.
How was it? How did you feel that day when the market tanked and dropped, what is it, 700 points or whatever, like crazy, right? How did it feel that day when you did that? Did you say, man, I made a big mistake? Or did you say, listen, this is going to turn around? How was it? How did it feel?
It was, well, I was on an airplane when it happened. And when I, coming back from Canada, when I landed, I got a voicemail that said, I'm now in charge. So I was, the number 2 level. And there was a competent woman in charge, but she had not run a business in distress. And I hadn't really run a business in distress either, but I played, collision sports. And so when people say, there's a wall, run through it, I'm like, okay, you want me to run through it fast or run through it slow, but I'm going to run through that wall. So for me, it wasn't, it was sort of like, okay, here we go. Now I'm in charge. What do we need to do? Let's come up with the plans to get through this wall. And it was, I distinctly remember I sat down with the chairman of the board, and he said, well, we've got 68 employees. We can afford 5. Go find the 5 of the 68 that could be the core group. And it ironically and coincidentally correlated to people that played collision sports. It's just like the sort of people that if you ask them to do the impossible, they wouldn't bring out the regression analysis to tell you that the probability was very low that it would be successful. They'd just go like, fine, you want me to, run into walls. Okay. Where's the wall? So those would, got the team down to that, went out to meet with the venture capitalists, and, how the herd mentality and the pendulum swings. When we went to meet with the venture capitalists, we had a term sheet. Before I started, I saw that term sheet. That term sheet was, I believe it was 2 tranches of $10 million. It was 5 plus 15. It was a $20 million commitment with the $5 million down, hit some metrics, come on back and get the other 15. So we had hit the metrics, and we got in the car, drove out to Long Island, sat down with the venture capitalists. They'd asked us to bring the term sheet, the original term sheet. We brought it. They said, okay, put the term sheet on the table. We'd like to discuss it. We put the term sheet on the table. They took the term sheet and they ripped it up in front of us. And they said, you're not getting the $15 million. We know we're contractually obligated to do that, but we're not going to give it to you. And so you have 2 options. You can sue us and you will never raise money ever again in your entire careers, because you'll be known amongst the venture community as having sued the venture capitalists, or go back to your office and figure out how to bootstrap your way through this. So we got up and left, went back to the office and got to work.
Wow. And how did it feel? I mean, because now you're starting right.
That was a punch in the gut, right? I really had thought, well,
I can't believe those guys didn't do it. That's interesting, after all the time it took to negotiate the deal, that they just let you hang in like that.
Yeah. Well, I'm sure for them it was like they were looking at their portfolio, like how do they cut losses across the portfolio?
I mean, that's going to treat everybody the decisions, right? Is you got to make the decisions. But I remember too, because in 2000, March of 2000, I remember distinctly the day it happened. We were planning on doing an IPO on NASDAQ in June. So then people said to us, well, what are you going to do? And we did an analysis and we looked at it and we said, what's the probability of success if we do it? What's the probability of failure? Well, if people that didn't do it, we looked historically at companies that had not done it in the same kind of situation, like in 1987, right? Remember Black Tuesday?
Yep.
So we said, we got to do it. So we went out, we did it. Raised about 30 million, I think, at the time, which wasn't a lot, but is enough to keep the lights on.
You did an IPO in June of 99?
And 2000. Remember, it was March 2000.
Yeah, okay. Yep.
So it was March 2000. We did IPO in June.
Yeah.
After that, and it was successful. We raised some money. It was enough to keep the company moving forward.
Wow. That's
And
amazing.
then the company was sold to Salesforce for $1.35 billion. After that, it was bought by a private equity firm and then sold. But the point is, when you have to go through brick walls, I remember because I was a senior executive at the company. I mean,
Yep.
talk about brick walls. It was like, oh my God, it's like talk about sucker punch because we all had shares and we're thinking, man, these shares aren't going to be worth a lot at the time. And we did it. But I remember Webvan and Pets.com and all these other
Oh, yeah.
companies
Yeah.
that were out there. And
Yeah.
when
Pets.com went to zero. Yeah.
I remember
And there's a lot of employee challenges, right? If you have a staff and their cost basis or their notional ideas that they came in with stock options at $4, that would be in the money at $4, and they're now at 40 cents. They're like, wait a minute, it'll be 20 years before I get in the money. So you just what they thought was the reason why they came is just evaporated and worthless to them. And so now it's just the paycheck and the inspiration of the leader and the purpose of the organization. And oftentimes, right, if it's pets.com, maybe people are like, I don't really care about pets. I'm here for the stock option plan. Yeah. Right. So
yeah, that was interesting time. And we went down through it, but you got to keep your head straight. You can't give up, and you got to look and you got to look ahead and not let the noise carry you down. It was interesting.
Right. But if you look at the capital markets, right, there's a herd mentality. There's an institutional herd mentality, right? Individual retail investors will tend to follow what the institutions are doing, right? They look at the big money, they read the tape, and that big money, when they decide to go to the sideline, everybody goes to the sideline. Everybody just sits on the sideline, and then they watch nothing happening. And I think as we over time move into a distributed blockchain capital market, where it becomes there's more consumerization, right? And consumerization is happening in all industries. Right. And as that happens in the capital markets industry, there'll be the herd will have fewer elephants in it and more gazelles in it. And those gazelles will be like, well, why are we all going to the sidelines? I don't want to go to the sidelines. I see some early blood on the streets right here. I want to go in and make some investments because my capital's not working for me. Right. Today, it's more of I've placed my capital with some large fund and I've outsourced the decision making to them. And they've decided that they're going to sit on the sidelines, and they're telling me and everybody else that our money's not working for us because it can't work for us right now. And the incentives for those intermediaries is that, if the market goes up, it's because that intermediary is brilliant at managing money. But if the market, if the LPs are losing money, it's because of the market, right? So they can just blame the market and say, well, the market sucks and nothing's happening, so we're on the sideline to protect your downside. But I believe they don't take enough individual ownership. There's an agency discount to how those intermediary institutions manage capital for different reasons. And I think over time we'll see more consumer. Well, we've already started to see it, like with Robinhood and some of the meme stocks, where for better or for worse, individual retail investors will make up their own decision about what do they do with their capital, regardless of what the smart people on Wall Street tell them they should be doing.
Yeah, no, it's interesting. Robinhood was started in our office, the same place where I had my office in Willow Road, Menlo Park. So I saw those companies. It's amazing. So when you went down through it, so what was the lesson? So you were there about 2 years, right? So to 2002. What lessons did you learn when you're going down through a market like that? So you were saying, you got to stay positive. You got to walk through walls. What other lessons did you learn?
I also learned that when the market is really tough, it's tough for everybody. And a lot of the implied rules that apply in a good market don't necessarily apply in a really bad market. And one of the specific lessons I learned is you don't need to pay your payables right now. Right. And because we didn't have enough money. So we had, for example, I think we had, let's say, $250,000 of cash on hand, and we had $1.25 million of payables. Like, we're insolvent. Technically insolvent. What do you do? And option A is you just Chapter 11 shut down and nobody gets any money, right? Option B was, which we did, is we call all the vendors and the creditors and ask them, say, hey, I'm sorry, but this is our situation. I've got 20 cents on the dollar, and it's like, I could give you, if I gave you 20 cents, I'd be broke. So I can't even give you 20 cents. And what generally across the board, what we did, we structured it.
you negotiate with them?
I said to them, I said, look, put yourself, and they were all in my position, right? Not all of them. Most of them, they were either in my position or they just received many calls like this previously. So they understood that everybody, the economy to some extent, it's, I don't want to say it's a house of cards, but it's all predicated on credit and cash. And when the music stops and the money stops, the money just stops, right? So if you don't pay me, I can't pay the other person, and that person can't pay you, right? So all this money that we thought was moving around the economy just kind of stops moving around the economy. And the phone calls and the emails start happening saying, I got 20 cents on the dollar. I can pay you 10 cents on the dollar, which is 1 cent on the dollar per month for the next 10 months. Either that or I just don't pay you. You tell me what you would prefer of those two choices. And everybody, 100% of them said, yeah, we'll take 1 cent on the dollar for the next 10 months until you've paid me off 10 cents on the dollar.
Wow, that's interesting. That's interesting.
Which we did. We paid everybody 10 cents on the dollar. We survived. I turned the company around, made it profitable, and then I left. Once I said, okay, now it's profitable. I'm going to go now because I need to rest and to be in a place that has a budget, so we can grow.
Well, how was it? What did you do? So once you went through e-marketplaces and you went back to American Express, right? So how was it when you went back over there? How did you feel? So you must have been relieved a little bit because now you got a paycheck. You don't have to worry. It's somebody else's deal. Now you can do what you can use your entrepreneurial magic inside American Express.
Yeah, no, I felt pretty good. One of the good things about American Express is the scale of it, right? And sort of when I see problems and I see solutions, they tend to operate very well at scale. And in a small startup company, scale doesn't really apply. It's really about margin. You have to go out and get your 50% margin. If you're at a very large scale, you don't need a 50% margin. A 10% margin would be great because you just have just fantastic scale and you're producing tremendous, absolute gross returns or profit, right? So to go into American Express is like, for example, I said we should distribute gift cards through Walmart. And I was told that's impossible. It's just impossible. No one can do business with Walmart. They're just too difficult to do business with. I said, well, give me a shot at it. And yeah, it took a while, 18 months perhaps, but we did a distribution deal.
What was the secret of it, Ed? What was the secret of doing that deal?
The secret with Walmart and with all retailers was to change the paradigm on how they make their decision. Right, their decision criteria at retail is typically about margin. It's their margin on the floor, right? That's how merchandisers operate. That's how they're incented in their annual bonus. So we couldn't win that war because the margins on selling a $100 American Express gift card are nowhere near as good as selling a $100 Best Buy card, right? So there's a $100 Best Buy, in the gift card space, the stores have operating margins, let's say 35, 40% operating margins. So they'll provide gift cards at a 15% discount to face, right? Wow. And that retailer will take the 15% and sell it at face. In the case of an American Express gift card, we're not the merchant. So we don't have that margin. We're just making, the gross is 3%, right? 25 cents plus 2.95 or whatever, right? So that's the gross is 3%. So we just really had, a $4 or $5 fee. And how do we split that fee? And that $4 or $5 fee is lower than when you look at it on a margin basis, right? That's a 4%. Maybe we're giving them 4% versus the Best Buy cards giving them 15%. So I had to convince the prospects that they were using their entire business was using the wrong metrics to make decisions, and that they ought to be. If they looked at their costs are largely driven by square footage, and they should be looking at rent per square foot. And if they give me 3 inches by 4 inches of space, how much rent do I pay for that space versus the other guy? Right. And the velocity of sales of Amex gift cards and Visa gift cards there's a higher velocity of them because they're universally accepted. So you might sell 4 or 5 or 6 universal cards for every one.
And they make what, like 3% on each card?
Yeah. And so we were saying, well, look, I've got, for this amount of shelf space that we take, we will pay you $3 an hour. The other guys with a bigger margin are paying you $1 an hour. So I'm actually paying you 3 times more rent for the placement in your retail space. And once I convinced them that categorically they were using the wrong metric and they could use a better metric, then they're like, okay, yeah, you're right. We were using the wrong metric. Yes, the answer is yes. Let's do the deal. And that was a multi tens of millions of dollar profit deal for American Express and for Walmart.
So you went over to Blade Payments, and what was that? So I know Medici. How did you work that deal? You did a crypto debt card, right?
Yeah. So when we're at Point Payments, once we had figured out, we built the system to enable pay with points, and then I discovered Bitcoin. I'd asked my CTOs, one of the most preeminent financial engineers, software engineers on the planet, sold a business to Google for $300 million, which became Google Wallet. And I said, let's run Bitcoin through the system. And we ran Bitcoin through our system for our demo purposes. And then the more time, I had a Christmas break, and over Christmas break, I thought about it. I was like, we should just go all in on crypto. And my technical partner at the time felt that Bitcoin wasn't ready. It was version 0.2 or something. It's like it's not production ready. And he basically refused to work with it at that time, right? It was 2013, 2014, right? It was at, let's say, $17 a Bitcoin. And I was like, yeah, but it's just, for me as a payments person, I was like, this is.
How much was it at the time?
It was $17. Wow. Yeah, I saw it at 17. We got into it at 17. I was going to the BIP protocol improvement meetings, the Socratic meetings in New York with the developers, the Bitcoin developers, and we're talking about, and I was like, this is fantastic stuff. It looks like it's going to be a solution, a long-term solution for non-sovereign currency and assets, on the internet. And then went to $62, and I was like, yeah, it's too bad I missed it. I'm not in this for the get rich quick anyway. So I probably don't need to be buying any of this stuff because it already had its run up.
You didn't buy any of it?
I did, later, when it got to 2000, I was like, okay, I'm not making this mistake again.
A great deal, right?
What I did is I and I did this not just for myself, but for the people on the team, is I said, look, why don't we take one of your paychecks and I'll pay, the company will pay us in Bitcoin. And some of the employees are like, no, I don't want to do that. And some of the others are like, yeah, okay, I could afford one paycheck in Bitcoin. And I think that's worked out well for those people that said yes to that, because that was when Bitcoin, I think, was it was around $1,800 at the time. So it's
well, that's great. So you went down through and did it. And then how did you meet the Medici Bank? How did that all come about?
So one of my co-founders at Blade Payments is Brock Pierce, who's OG in the crypto space. At Blade Payments, we
one of the top Bitcoin investors in the world, isn't it?
Yeah. And we invented the Bitcoin debit card. I invented the Bitcoin debit card and figured out how to make that happen. Pitched it to a bank in Europe called Wavecrest. They allowed their other customers to break rules, and MasterCard and Visa shut them down. So ultimately, they went out of business, and that obviously had an adverse impact on us. And I ended up going to work at the other bank that we worked with called Fidor Bank. And Fidor Bank's a German challenger digital, challenger bank. And
but you did this. So was Blade who bought? So Medici bought Blade, right?
No. The intellectual property migrated over. So it was sort of an acqui-hire. Got hired by Fidor Bank. Did not, we talked about whether or not they would want the intellectual property of the code that we'd built. They decided no. They were a Ruby shop. We were Node, and they're like that. They don't know what to do with our code. So just left the code and the intellectual property to the side. It was at Fidor Bank for a couple of years.
Hello. Yeah, you froze up for a second.
Did I freeze up? Sorry about that. The challenge there was, and the opportunity was, bring Fidor Bank to the States. And
where was Fidor Bank located?
Munich. So they were Munich, Germany, and we were banking throughout Europe in German and English. Yeah. The official language of the company is English, right? And maybe 100 employees from around the world, mostly in Europe, but and myself and a couple others we'd hired in the States to bring them to the States. But Fidor got acquired by a French banking conglomerate, which had no ambitions about bringing them to the States. They were more ambitious around the technology of Fidor Bank. So how do they bring that technology into France? And maybe how do they commercialize that technology elsewhere? So I had a playbook on how to do a digital bank inside the States. And I stuck around for another, probably close to a year, trying to commercialize the tech stack. And the key takeaway from that was how awful is the legacy tech debt of traditional banks. And because banks largely don't feel that they compete. You know, banking is traditionally a local business, right? So you compete locally in your branches. It's a real estate play. Open up a branch. You know, you get deposits from people that drive by the branch, and then you lend to people that you play golf with or go to church with or synagogue with, right? It's like people you know and trust, so therefore you have a reasonable risk. So bankers are oftentimes willing to share their darkest secret with other bankers because they figure, well, you guys are in Munich, we're in Amsterdam, we don't compete at all, so we'll tell you everything. So the secrets that I heard out of Estonia, Slovenia, Poland, Mexico, Argentina, Brazil, Amsterdam, Spain, were just fascinating to me about the problems that traditional banks have in their technology stack and how they literally cannot do what a startup bank could do by building new modern software. And at the same time, I had this playbook, which was like bring the modern technology bank to the States. Where would you do that? How would you do that? And it was like, yeah, you do it in Puerto Rico and you do it in the cloud. You target businesses and you be crypto friendly, and you want to have a brand like Fidor Bank had.
Well, how did you come up with the name Medici Bank?
Well, it was Brock Pierce that introduced me to Prince Lorenzo de Medici, and I met Lorenzo in New York, and of course he's like, well, I'm Lorenzo de Medici, and since he's a child, people have been poking him and saying, haha, where's your bank? Where's your bank? And he's always wanted to have a bank, but he's a philanthropist and an art collector, an art historian, and an artist. And
I heard he's got a very large collection. Is that true?
I don't know. I've not seen his collection, but I have seen pictures of him in various palazzos throughout Italy. And I've been invited to come and visit at the Vatican and the Uffizi Gallery. So I haven't taken him up on those invitations, but I plan to do so. And so when I met Lorenzo, now the interesting thing was I studied Italian in college, and I lived in Florence undergraduate, and I lived in Milan during graduate school. And we take out our phones. I'm like, where did you live? And we're like, wait, over there. I said, wait, what bus did you take? He's like, I took bus 14A. I was like, I took bus 14A. And so we take out our phones and we're looking at the maps, and we literally live like 4 blocks from each other when I was an undergraduate.
Oh my God, now why did you go to Italy? What made you decide? I mean, Boyle's not an Italian name. Did you just wake up?
Yeah, for a woman, I guess is the answer. I went to Dartmouth College, and Dartmouth requires 2 things of you in order to graduate. You must learn a foreign language, and you must learn how to swim.
Right? Seriously?
Yeah, they do not. They have no interest in graduating people that will soon drown. Right? So they're like, no, you're going to learn how to swim.
That's one of the first. I've never heard of that before.
Right. Yeah. So you're going to learn how to swim, so you won't drown. It will not be time and money wasted, and you'll learn a foreign language. And I had started with Latin because I'm not gifted at language. And I thought, well, I'll just do Latin and be done with it. My girlfriend at the time had studied Latin in high school, and I thought she could help me out. And then when she went to college, she decided she was going to study Italian, and she was going to go to Florence, sophomore spring or something like that. And I was like, well, let me switch over to Italian, and I'll go to Florence sophomore spring. And so that's why I switched to Italian, and that's why I went to Florence and spent the term in Florence.
Well, I tell you, and so you went over there, and then, yeah, that's amazing.
Yeah, but now, right, and you can't live in Florence and not fall in love with Florence and the Medici family history. You just walk around, so much of their properties, and you're like, this is unbelievable. Then you learn the history that they basically invented banking.
You haven't gone over there and hung around with Lorenzo, going to Palazzo and all that.
I know. Well, we're rarely in the same place at the same time. He's rarely in Italy for long, right? He moves around quite a bit. And the and our orientation historically has been, we've banked a lot of crypto companies, and they're not based in Italy, right? They're elsewhere. But when I met Lorenzo, and understanding the history of the Medici family inventing modern banking, they invented the branch, they invented the check, they invented the letter of credit, right? They basically didn't invent.
I thought that was a Knights Templar that did the check. Actually, didn't they do that? They were going
no. The Medici Bank was the bank that allowed. The problem was on the Silk Road, you had traders just getting robbed, right? Highway robbery.
I remember that.
And they were getting there was highway robbery, not to steal the goods. The highway robbery was to steal the payment for the goods, right?
Oh,
so you'd bring all your rugs or whatever it might be, and then you'd get paid and you go home. And on the way home, you get robbed and they take all the money. So what the Medici did is they opened up branches. They say, well, if you're bringing, rugs from Turkey, we will just, we will give you basically, again, stablecoin, paper-based stablecoin. Here is a piece of paper that says you bank with the Medici family and your counterparty banks with the Medici family. And so we'll just do a book transfer and you will carry nothing on you other than basically this IOU that says that you have to be this person with this name to present yourself at the bank branch, and that person will get these funds credited to their account, right? And the Medici family also were the first bank to commercialize or use at scale dual entry accounting, and it's a double entry accounting with the offsets that ensure that banks the books reconcile.
Wow!
So that allowed, and there hasn't frankly been a lot of innovation since in the last 500 years, right? I mean, the next big innovation was do it on the internet, and there's still a lot of banks, frankly, that you got to come into the branch if you want to send a wire. You got to come to the branch to send a wire, and that to me has always seemed somewhat stupid, frankly, right? It's like why is me presenting myself physically in the branch more safe than presenting myself digitally online? Are there not ways? And there are ways online to ensure that you are who you say you are, right?
Yeah.
Whereas my brother who looks somewhat like me, and I've got a friend who looks somewhat like me, could show up with a fake ID and pass as me, right? Yeah. Perhaps more easily than getting my IP address and knowing the two-factor authentication on a certain app,
Yeah.
So be that as it may, we saw the opportunity to launch a digital bank inside the United States, and Lorenzo said he always wanted to have a bank, and I said I always want to have a bank that said Medici on it. We're like, well, let's.
Now, who owned the bank before you guys got started with it? Was that Brock, or was it you? Or
no, Brock's a major investor. He's a day one ride or die partner to the bank, but he's hands off. He's not an operating executive or anything. He's a financial investor, and obviously.
I recall that he was in the Mighty Ducks or something, wasn't he?
That's right. Yeah. Child actor turned entrepreneur turned philanthropist, and he's a highly diversified investor now, not just only in crypto. He ran for president of the United States, so he's very diversified and very active in many different parts of the world, in many different ways, right? And so he introduced me to Lorenzo. We decided I'll change the name. We'll call it Medici Bank instead of the name I was thinking of at the time. And we acquired a bank that was going into liquidation in Puerto Rico because it was the fastest way to get a license rather than go de novo and wait for a maybe or a no or a yes, a year or two forward. We acquired basically a bank, a defunct bank, had to shut it down and then rebuild it and open it up again. And for the most part, because of the legacy tech issues that I had seen at other banks, we decided not to rely on third-party software because you end up with like spaghetti solutions that are all over the place in banking. And we decided we'd have a third-party core, but all the online applications, the admin system for internal use of reporting, the banking portal, all the things that the customer would touch would be proprietary and be beautiful and intuitive to use. And we accomplished that. And then when we had accomplished that, we were opening like in a beta. This was a couple of years ago in a beta sort of level, And we determined that the problem, though, now is kind of like whack-a-mole, is you're only as good as your lowest common denominator, and the lowest common denominator became the core. The system that should have been the most robust and reliable became the system that was the least robust and least reliable amongst the other systems, which we had custom built for our own use. And we ended up basically building our own core system.
Well, that's amazing.
So we have a full stack, real-time, cloud-native system. Which is, nobody has that in banking. I mean, I want to say nobody, but it's less than 1% of banks have a real-time tech stack. Everything is, we don't necessarily see that as consumers, but for the most part, more than 90% of banks are operating in a batch systems. And some of these systems, my first job out of college I was a COBOL programmer. And
well, I haven't heard that in a long time. That's been a long, long time.
Well, I was meeting some folks at Bank of America in Hoboken or Jersey City a few years ago, and they told me they have a couple of older gentlemen on the payroll, guys in their 60s that were COBOL programmers back in the early 80s, and they keep them on the payroll in case the code breaks, because so much of their back end systems are in COBOL, and nobody knows COBOL, right? And so they just have these guys are paying an inordinate amount of money to keep around to fix things when things break, because nobody codes in this stuff anymore. But that's the backbone of our financial infrastructure. Mm-hmm. But when you take it into the real world as a consumer, is I send you money, and it appears as if the money's out of my account, and it appears to you that the money's in your account. But then sometimes you're like, but you find that they'll say, okay, whatever, $5,000 has been deposited to your account, $1,000 is available now.
Yeah, it's really interesting.
But I thought I had $5,000 deposited in my account, and now $1,000 is available now. Now you already have $10,000 in your account. So what's the $1,000 that you're spending? It's actually your own money, because the $5,000 is not yet into your account. Now the bank is willing to take a risk on that one. And basically, they're providing you interest-free credit on the one, because they're highly confident that 5 is going to be there tomorrow. But it's not, even though it's an internal transfer from one customer at the bank to another customer at the bank. And if you saw this, like in the crypto-friendly bank space, we had Silvergate and Signature Bank, may they both rest in peace. And they invented these blockchain solutions, Signet and SEN, and they were database overlays to make the bank feel extremely confident, 100% confident that you had the money and you had been debited, and now I'm getting the money so I can be credited. And those blockchain solutions, they were just a single node. It was basically just a SQL, might as well have been a SQL database, but they were an overlay because the core banking systems don't settle until after midnight.
Right? Got it.
So you have an IOU. I'm sending you something. It's basically you get an IOU real time, but those don't settle and clear until after midnight end of day processing, which is where almost 100%, mid 90% of banks operate today. And so for us, it was like we don't want to build that way. We want to build for the future, be real time 24/7. Coming back to my American Express background, I really didn't work at a bank until I worked at Fidor Bank. So the idea that the institution closed, I was just never really dawned on me. I was like, I spent 15 years at a financial institution that did not close. You could swipe your card anywhere on the planet, any time of the day, any day of the week, any day of the year, holidays, Christmas Day, whatever it might be, and the card would authorize. Right?
Yeah, got it.
Against your money. So I was just always assumed that that's how things ought to be. And then when I got into banking, I was recognizing, wow, these guys don't open until 9 and they close at 5. They take off lunch. If you actually do the math on the number of hours that are in a week, banks are closed 78% of the time.
Yeah, no, it's amazing. And Ed, we're coming up to we're a little bit running about 15 minutes behind. Closing thoughts, and how do people get a hold of you? I know you're looking at raising money. You got a lot of different things you're working on now.
Yeah, well, we're going to launch into the crypto-backed lending space. So it's asset-based lending, just like security-based lending, but we're going to take Bitcoin and Ethereum as collateral. That space is wide open because the people that were in that market before, which grew that to a multi-billion-dollar market, they're in jail or going to jail. They were shut down because they were not regulated banking entities and they were doing regulated banking activities. So regulators closed them, and they were also pursuing some criminal activity. Anyways, the market's open for us, and we're going at that market. The good news is that market's so open that we expect high growth in that when we enter that market. As a regulated entity, we need to offset the risk assets that we will hold in those loans with equity in the bank. So we're raising equity into the bank.
And then what's the best way for people to get a hold of you?
My email's eboyle@medici.bank. That's a sure way for me to not forget it, because I try to get to inbox zero, and I'll keep things as unread until they're dealt with. And you can visit the site of the bank at medici.bank.
Wow, that's great. Listen, Ed, thanks for taking the time out of your
Yeah,
business.
Gary, thank you for the time. It's my pleasure.
Good to see you today. And thanks to all my audience for joining one more time. GESD presents Silicon Valley AI and Tech. My name is Gary Fowler. I'm your host. Stay happy, stay safe, and stay healthy. And I'll be back to you again next Tuesday for another exciting edition. Thanks, everybody. Take care of yourself. Appreciate it.
Bye-bye.